Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 698th installment of Short-Term Trading Live with Oscar. Traders, this video is being filmed on Tuesday night for Trading Wednesday. That's Feb 23rd, 2011. Remember that futures trading is risky and can cause substantial financial loss. Traders, I left you off with my last video, the weekend webinar. In that weekend webinar, I said, let's step away from daily trading. Let's look at the long-term view. Let's look at weekly charts. On those weekly charts, yes, there'll be pullbacks, but we buy the pullbacks. And overall, indice markets look strong. That was what was in my weekend webinar video, the one previous to this. And I think that that is absolutely correct. In fact, traders, what we have on the board tonight is this. The two-day rule will very, very likely be invoked tomorrow during Wednesday's trading session. The two-day rule is an Oscarism. It's an Oscar's Trading Academy or the OMNI Trading Academy, one of their rules. Traders, you will not find it in books or on the internet. It is something that we've been using for many, many years. What is the two-day rule? The two-day rule is, let's say you have a market that's been going up for a while, like the Nasdaq, S&P, the transportation average, you name it. Then you get a big, long pullback day, like Tuesday. That's day number one. If you start off day number two with a pullback, you buy into that pullback and expect day number two to end up turning this thing around and rallying up. Those are two big down days in a bull market, the two-day rule. Traders, why would we still be interested in buying the dips after that huge rout yesterday? Well, first off, we bought the first dip yesterday. We made 10 points, got out of the market's way, sidestepped the rest of the day, and it came down. Why would we want to buy the dip? First of all, you got the two-day rule, right? Second of all, traders, listen. Let's say you're a farmer and you have a huge piece of acreage, right? And you wanted to plant some seeds. Let's just say wildflowers. You get a bag of wildflowers, you get 5,000 seeds, you plant them around, and the flowers grow like crazy, right? Some will grow, some won't, but you got to expect a little bit of a forest to come up if you plant a lot of seeds. Well, let's take that seed analogy to the Fed and our markets and think about this. The Fed did not sprinkle several thousand seeds. The Fed sprinkled trillions and trillions of seeds into that garden. And if you don't expect a wild forest to grow out of that, then you don't know anything about planting, right? Traders, the Fed put trillions of seeds into our bed, into our seed bed. No matter what you might think, nothing can come of that but a wild forest. At first, it's going to grow like wild. Then it'll calm down. That is the phase that we are in right now in our markets. Again, remember, the market has a two-day pullback. Think of how stingy our rally has been lately. There's been almost no pullbacks. And then when we get them, they're very small and we take off and rally, right? Well, all the pullbacks, we've all been waiting for everybody going, Oscar, no pullbacks. Well, we've gotten it. Boom, big pullback Tuesday. Hopefully it'll start off with a pullback Wednesday, giving us day two. And then we can invoke the two-day rule and see if the market goes higher. Now, we're not just going to step out and invoke the two-day rule. We're going to let the market test some key OMNI levels. If they hold, we will be invoking the two-day rule. Now, many, many index charts are testing support. We are going to look at that in the chart segment. Traders, when in an established bull market like the ES, like the Nasdaq, established bull market, something that you know you can call a bull, professional traders buy deep dips. A two-day dip would be a deep dip. It would be a perfect time for the two-day rule. So we are going to get into a chart segment in just a couple of moments where I can illustrate where we'd like to get into this two-day rule, how the index charts are testing support, and that should reinforce that when in a bull market, professional traders buy deep dips. What is that? What is going on? What is that? What?
All right, yeah. Yeah, I'm going to tell him that. You're right. Okay. Listen, Oscar, with that 2011 call, you got a problem. You got a big problem. If you don't make that 2011 call, you're going to get hurt really big. Don't want to do it, but you're just disappointing us too much. Make that call. Get it out. Do it tomorrow. Understand me. It ain't no joke no more. Do it. All right, Oscar? You don't want your face broke, do you? Maybe we'll break a finger, just to give you a little lesson. Yeah, the finger won't get in the way of your face jumping around on the floor like a maniac. Okay? See you later. You think about it.
What, you know, enough with this knucklehead from back east. Call the cops on this guy. I can't take it anymore. Call the cops on him now. With no further ado, let's go look at some charts. Okay, traders, the leader out of Europe, the New York Stock Exchange DAX Daily Bar. Still a very strong-looking market structure overall. We had our bull flag, blew out of the bull flag, but here is what's interesting. The two-day rule. Traders, you can see the DAX had a big breakdown, settled right down here. The next day had a major breakdown, hit the trendline support. You know where the DAX settled? Right here near the top of its day. Day one down, day two, if you invoked the two-day rule on day two, you would have caught the low in the DAX last night. Traders, the two-day rule works, and we think it's going to work well in the German DAX. As you can see, there is a smaller secondary parallel channel. Support, support, and support as of Tuesday's trading. Resistance, 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 a very nice channel. 1 day down, 2nd day down, 2-day rule goes into effect. Looks like a buy in the DAX. Look at the major support it's coming into. Traders, let's look at another chart. Okay, out of Europe once again, the FTSE illustrating the 2-day rule. FTSE has a nice rally, then has a big down day labeled with number 1. Second big down day, hits the support line just like the DAX, support, support, support. And where does the FTSE settle? All the way back up here. Here was the low. Here was the settlement on day 2 of a drop in a bull market. 2 big down days in a bull market constitutes a buy. Let's look at another chart. Okay, traders, the big leader out of the United States, the Dow Jones Transportation Average. As you can see, parallel channel. We've come right down into the support of that parallel channel. I think that we've had a big down day. If we start off tomorrow with a bit of a down day, it gets bought and comes right back up and starts heading this way. That is usually what you'll get if you invoke the 2-day rule and the market cooperates. We do expect it to cooperate. A lot of price movement has been giving back in 1 day. In a very bullish market, we buy 2nd day down in bull markets, unless, of course, the market just continues lower. Then our stop gets hit, and we start to look at the market possibly in a different fashion. But for now, big booming bull market, professional traders buy deep dips. Let's look at another chart. Okay, traders, we know the Dow Jones Transportation Average is our leader in most cases. However, we also recognize that the Nasdaq has taken leadership for basically this whole year, 2011 so far. The Nasdaq, once again, look how it came all the way back on one big drop and hit major support. More support. Look at this support line. Hits here, hits here, hits here, hits here. And we bounced off of it on Tuesday. Now, look what else is going on here. Remember the big bull flag that we broke out of? If you extend that top line out a little bit, you will see that another intersection right there. So you have support, support, major support, all coming in right here. I say the Nasdaq has had its dip. Another indice or index market testing major support. I like the Nasdaq for the 2-day rule. Let's see what happens. On to the next chart. Okay, traders, now the follower, the E-mini S&P March daily bar chart. More support evident, looking the same as the other index charts. And look at this parallel channel. It only had one overthrow, went right back into the channel. We are at it right now. The major channel is just below it, and that is major all the way back to March of 2009. That is not much lower than where we are now. So this whole area is deemed support, traders. The Nasdaq, the leader, already got to its bottom line. The S&P will probably have a little bit of a dip, and a rally should ensue. That would make our 2-day rule work out perfectly. Of course, we are not just going to jump in. We will allow the market to test our key OMNI areas, and if they hold, 2-day rule becomes invoked. Let's see what happens. On to the next chart. Okay, traders, switching gears now. We are looking at the 30-year T-bond chart. 30-year bonds in a nice established bear market. We had a big bear flag, gave us a breakdown into another bear flag. And what else is going on? Major resistance line right here. What else is right there? Extend out the top of this bear flag, and it hits right there as well. Then you have the top of this new bear flag all converging in one spot, telling us that very likely, if the S&P and the 2-day rule becomes invoked tomorrow, S&P will go up and bonds will hit this resistance and head right on down. That is what we're looking for. Of course, the S&P does need to hold in order to get the bond buyers who bought the flight to quality trade today, to get them back out of bonds. Traders, I can say this, a flight to quality trade never lasts very long and usually falls apart quicker than the way it built itself up. So the moment the fear comes off the street, we break right back down. We are at a resistance area where that very well could happen. Keep your eyes peeled on the daily bond chart for tomorrow. So, traders, you've seen the charts. Don't let these markets scare you. A pullback in a strong bull market is expected. It's healthy. And professional traders buy deep dips when in a bull market. Remember this. Do not fall in love with the downside that you've seen on Tuesday. Do not fall in love with it on Wednesday. And a stop is your best friend. No matter what the charts look like or what the 2-day rule says, you got to have stops in. You got to place them first, because if you do not have stops, you can be annihilated. I don't care that there's a 2-day rule. I don't care that there's support lines. It doesn't mean it's going to hold. The market could fall apart. Make sure your stops are in. Omni Camp traders, listen up. You traders that are coming to Omni Camp, some of you are already in Vegas and some of you are coming in the next day or two. Remember, once you guys get into town, call us with your coordinates. Give us your hotel. Give us your cell phone numbers. The rest will happen from our end. Get some sleep Thursday night. I'll be working you from Friday morning going forward. Once again, welcome to Vegas, Omni Campers. Now, traders, look, we've seen a run-up in bonds and a run-up in gold today and a run-down in the indices, right? Basically, the world over the 3-day weekend decided let's focus on freedom fever, which is crossing or spreading across the Middle East. Now, flight to quality trades end as quickly as they begin. They buy bonds for a day or two in a flight to quality trade. As soon as the world starts to see things a little clearer, they jump right out. I think that's all we've seen. We had a small flight to quality in the gold and in the bonds. They sold off the S&P. I think that reverses very quickly, so keep your eyes peeled this week. One more thing about gold. Traders, we ran into a major resistance area this day, Tuesday, in the gold market. You've heard me mention for the past few weeks that Omni has his eye on gold for a possible candidate for a top. If that top is going to actually continue to be created, we should not go higher than yesterday's high in the gold. And in fact, we should start to back off a little bit. And if we back off again in gold and drop another $1,500 like we did a few weeks ago when Omni called for possible topping action, well, then I think we're getting there. Then I think the top is almost established. Now, I am not calling for the top in gold yet. It calls itself. I am not a clairvoyant. I just read charts. I'm good at reading the charts, but I do not anticipate them. I read them today for what they show. The charts in gold show me a top is building, but no top can possibly be called yet. Let's see if gold fails to get above the resistance that it pegged on Tuesday. If it fails up here today on Wednesday, then I think we have to really take a look at if gold is running out of steam. Until then, traders, gold is still a bull, and I'm not going to call it anything else. Just keep your eyes on it. All right, traders, I think I'm about to get out of here. I don't think there's anything else I need to do. Please come on down to my site and grab a free membership. I am at the helm of chat rooms with my video camera on and a microphone, so I can teach you traders how to view charts. We hold classes regularly throughout the week. I include a lot of the free members into those classes. So come on down and grab a free membership at www.livewithoscar.com. All right, traders, I'm getting out of here. Remember, tomorrow's going to get tricky. It's going to be ugly. And when they pull it down, you bulls are going to get scared. Get in touch with me. I will show you where we are looking to play this game if, in fact, it sets up. Is there anything else I need to say before I skedaddle? Nope. I am out of here. All right, traders. Give me a call if you'd like. Otherwise, hasta la vista, baby. Keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop surrendering. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.